That's his cash surplus compared to this one. And again, this is all for illustrative purposes. I'm not saying you couldn't find situations where you might find that the cash surplus might go one way or the other depending on the number of items, etc. But I'm saying that in the ordinary course of business, it's going to impact the cash of a non-registrant more so than it would impact the cash of a registrant. So we've heard a lot talked about, oh, you know, there's going to be VAT on services, there's going to be VAT on this, there's going to be VAT on that. I hope we now see that it does not really matter. Because it's a vatable activity, it could be reclaimed. If in reclaiming your VAT you have that unusual situation, and it's going to be very unusual, where your input VAT exceeds your output VAT, then you're entitled to a refund. The way the refund process is going to work is this. Because we know it's an unusual situation to encounter. When it happens, it's going to be carried to the next period to see if there's an adjustment that takes place. If there isn't, then it will be refunded in the following period. We have, I think, 21 days within which to refund your money, or it starts to accrue interest. It's the same interest that we can charge. I can't remember what it is right now, but there's a particular act in which that interest rate is set. But there's a limitation in the legislation with regard to the length of time we will take or could take to refund your money. Now, like I said, it's only in the unusual circumstances where you're bringing in capital goods. And if you are, most of us, we plan our capital expenditure, we know what we're going to be doing. There are provisions there that apply to the controller. Once you give him that information, we could defer the tax. If there's tax applicable to it, it could be deferred. And what we mean by deferred is just that instead of you paying the tax at the point of imputation, we defer the tax to the accounting period in which you're reporting. That's all we do. So there's really no movement of funds either way. But we know, for example, let's say there are going to be some businesses that are paying us hundreds of thousands of dollars every month in tax, in VAT collected. If they're bringing in capital goods and the VAT on it is $30,000, but we're collecting hundreds of thousands of dollars every month, there's no difficulty in deferring that tax because there's no risk associated, or very little risk. We've got some alternative accounting schemes that we can use. There's the cash basis accounting, the flat rate accounting. But normally most of us will be accounting on an accruals basis. Those two alternatives were basically designed to accommodate two types of operations. The flat rate, where a business lacks the ability to maintain comprehensive records of its dealings. You know what we were thinking of? We were thinking basically of guys like let's say diesel mechanics, okay? And you've got a diesel mechanic, he's turning quite a bit. Or even a fisherman. Those guys go out, they buy stuff, they don't keep records of that kind of thing. They keep it on the dashboard of the truck, etc. But they can tell you exactly what their turnover is. In fact, everything goes into the bank, they can tell you. So basically what we did was said, look, if you can show accurate records of your sales, we understand your circumstance. A guy's got a boat to fix, he goes and he gets the part, and He isn't going to say file it anywhere. I mean, his hand's full of grease, he shoves it in his pocket, and that's the end of that. We're saying, yes, we can accommodate you. You can use a flat rate accounting system where you pay 4.5%. Doesn't necessarily save you money, as you'll see. And then there's the cash basis accounting, and basically what we're saying is that we're not interested in receivables, payables, we're not interested in anything like that. If you want to do it just based on the cash you collect and the cash you disperse, you can do that too. But of course you're limited. You're limited from the standpoint that you can only do that if your turnover is over 400,000, and I think you can only stay on that cash basis accounting for 2 years. This is an example of cash basis where we're saying that the sales was 9,440, the output VAT was 658.61. He had purchases of 6,000, the input VAT 418.60, the amount due to the treasury 240.01. Cash basis. The same principle, output VAT, the VAT I collect, less input VAT, the VAT I paid out for inputs into my business, the amount due to the treasury. Look at what happens with the flat rate. If he was on a flat rate, a 4.5% rate, this is what happens to him instead. His sales are 9,440, same thing, the same purchases, but on a flat rate, that's what happens. Because we're only dealing with your sales, because that's all you can provide us with adequate evidence of accurate record keeping, you pay 4.5%, and the VAT is 424.80, it's almost twice as much. Same scenario, same numbers, twice as much. So neither of these schemes were designed to particularly save people money. They were designed to accommodate persons. So it might still be in his interest to improve his record keeping. All we've done here is to pictorially represent what I've been saying all morning. VAT collected on sales or output VAT. VAT paid on purchases, on imports, anything we use, anything we bring into our business for the purpose of providing those taxable supplies. And the difference is paid over to the treasury. We talked about VAT return. You're going to be seeing some more information in the press, etc., with regard to returns, okay, over the next couple of days. But again, like I said, it's a form to be filled. That is for registration purposes. For the VAT return originally was, I think, 18 pages. By the time we were through with it, I think it's down to about 6. So it's not anything that's really very difficult to do. It's online, you fill it up, and that's it. There's some administrative penalties associated with non-compliance. And if I'm smiling, it's because 2 of my colleagues have joined me. Reinforcement for the question and answer period, you see? Okay. Administrative penalties, okay, there are 3 categories: minor, serious, and very serious. We're looking at $25, $50, and $25, $75, and $150,000. Where an infraction occurs and it has not been corrected on instruction to do so, those penalties are applied for each day of infraction. This is no joke. This is going to be, look, I've put it this way. we kept talking about moving to the first world. We're the first world. For the first time, we're going to really be paying attention to what people are paying, and the penalties are enshrined in the law. You have, of course, the opportunity to appeal. The appeal is to a commission that's set up, and if you don't like that result, the next step is the Supreme Court. There's no magistrate's court involved. That's it. I know we've got a lot of skeptics. I haven't seen any legislation in the Bahamas that appears to be as serious about compliance and enforcement. Now, you don't have to file any documents with your return. Like I said, it's paperless. I can assure you that the methods that we use for the purpose of determining risk and determining whether or not the information being filed is accurate are methods that are going to flag situations where we feel further investigation is required. Again, I suggest that you don't want to raise that flag. Are there going to be errors? We expect errors. We expect errors of honest errors of fact. We know they're going to happen. And particularly for the first 6 months, this is going to be a hand-holding exercise. We're going to do that. We're going to hold your hand. We're going to ensure that wherever there's any discomfort with regard to the preparation, wherever you may have made an honest error of fact, that those errors are corrected without penalty. So we recognize that there's going to be that difficulty. Beyond that, however, we want to ensure that you should be comfortable enough that your returns are going to be accurate. Failure to display a VAT certificate, failure to issue a VAT invoice or a sales receipt. A VAT invoice is important. It's important to the recipient as well as to you. Because if I'm going to reclaim my VAT, I need an invoice that meets the requirements. I don't want to reclaim VAT and then I'm subjected to review at some stage and the department gives me back a whole list of invoices and says, we're not going to allow those, we need a VAT on them. Because at that stage, the liability rests with you. So it rests with you to ensure that your invoices meet the requirements. And like I said, the most important thing on an invoice, your TIN number, your supplier's TIN number, or whoever it is that you're selling to, without VAT, you must show that TIN number on that invoice. It must be shown. Record keeping. We started to talk about that earlier, and I was saying to you that I don't want you to throw away your invoices, etc. It's the same thing. I don't want you to go out there and buy extensive systems. If you're in the kind of business where you generate a few invoices every month, okay? I can't think of anything off the top, but you might be in some business where you don't have a whole list of invoices, and you can keep it on a spreadsheet. That's fine. What's important is that your records must stand up to review. That's what's important. The legislation says reliable accounting records. It does not say sophisticated accounting records. So nobody's asking you to all of a sudden go out there and buy whatever. If you can keep your records, and I always liken this onto the old mom and pop store where they had a wire, and every time they got an invoice, they punched it through the wire and they hung it up. It's reliable. I could scrutinize that because they've got every single invoice for every purchase they made. It stand up to scrutiny. They might just be keeping a book where they keep on the front side of the book where their sales are daily and on the back side of the book where the purchases are daily. And they keep every year in one book. And they can tell you exactly how much money they spent in 210 for Christmas. They're that good. I'm not suggesting that we go and get grandmother who is now who's probably been keeping our store for the last 30 years, give her an aneurysm, tell her get a computer or something like that. You don't need to do that. So the records have to be reliable, and that's the most important thing. Once they're reliable and they could stand up to scrutiny, they would have met the requirements. The important thing, again, let's ensure that we retain those records for the period that we need to retain them for. Okay, 5 years plus your existing year. I know some persons wonder what happens in the event of a catastrophic failure. We lose documents, we lose records that are digitally maintained. I would like to think that everybody, if you're maintaining your records digitally, at some stage you do some kind of backup, you have a backup procedure in place, and in as much as you might lose all or most of those records, that you could recreate those records with some degree of accuracy. It is not unusual for that to happen. It happens in other jurisdictions, and trust me, there are methods that could be used to recreate those records with a high degree of accuracy. Now, I don't want to get too much into what's a debit and what's a credit, because that's not where we're talking about here, but for those who are interested, there's some indication here as to the kind of record keeping that you need. Now, at this stage, what we're going to do is we're going to stop and take a few questions before we break for lunch. I know we've run past the time, but I did indicate prior to starting this morning that it would have been necessary. I felt it was going to be necessary to do so. So if there are any questions we can deal with right now, let's try and do that. And if we have to come back and deal with some more, or deal with them during lunch, we'll try and do so too. Okay, let's, somebody's going to need a mic so we can get that moving. I think she has the mic in front of her, and she has a list of questions, so we'll take one of those.
You mentioned earlier about the various revenues that the categories that we would fall into. So let's say I fall into the $400K to $5 million in sales. And let's take, for instance, I'm let's say a furniture store. I am providing, say, I have an invoice, or I have a contract. Let's say I have a government contract. I am providing them with some furniture. And let's say that contract is, say, $1 million. Now, you stated earlier that when you invoice, or when the contract is actually at the date that you deliver the furniture to the government. So let's say I deliver my furniture to the government January 1st. Now I'm on a quarterly system where at the end of the quarter and the 20th of the following month, I have to pay VAT. But what happens when the government, or whomever I have the contract with, have not paid me? Let's say they would have paid me maybe $250,000. Now I have $750,000 still sitting out there. Yet you are requiring me to pay the 7.5% VAT. How do I deal with that?
I could have preempted your question. I'll answer it by saying this. And I don't want, if it sounds callous, it's not. Receivables management is an internal matter. All right? We are accounting on an accruals basis. The accruals basis recognizes revenue at one point, and it also recognizes your expenses at a similar point. You're saying that you've got receivables, but you also have payables. You're allowed to claim with regard to your payables. Receivables management is an internal thing, and if there's one thing that's going to come positive, that's going to come out of VAT, it's this. That as business owners, we're going to start paying attention to things like receivables.
Well, can you break the government arm to pay them? I mean, even though they might pay,
I totally understand what you're saying. I'm going to reiterate my point. My position is simply this. And I had the same thing raised by some physicians in Nassau who raised the same concern with regard to when insurance companies pay them. And my position is, if if you find that to be unacceptable with regard to the running of your business, and if we all find that, and we all say, you know what, we're not prepared to do business with you on this basis, then it will change.
So then turn away $1 million.
Well, no, it's not a question of turning away $1 million. Somebody at some stage, you know, somebody has to be accountable for it. I'm sorry. You know, it's an internal thing. If you choose, you have to manage your receipts. All of us have to.
But Keith, the reality is that when you're dealing with government, and I can be more specific here with our company, the reality it doesn't work that way.
No, listen, I hear what you're saying. I understand what you're saying. There's a cost associated with receivables. Receivables means that you're funding somebody else. That's what it is. It's a decision you're going to have. It's a business decision. It's a business decision. If my cash position cannot afford me to fund you, then I can't fund you. But look, again, I'm saying it's a receivables management issue, all right, and that is something that I cannot address, or VAT cannot address. It's something that's an internal policy decision.
But isn't the VAT the government?
And government departments are also VATable. Again, you know, we're going around in circles with this. No, we're going around in circles in this, and I'm saying to you that it's an internal matter. It's a receivables management matter. That's a decision that has to be made by individual companies, by their owners, by their directors, with regard to, by their credit services bureau, whatever they have with regard to who they offer credit to and how much credit is offered.
My next question is,
Could we just have some, there are other people there, tons of persons who have their hands up. So just in fairness, this gentleman over there, he had his hand up for a while. Let me see the mic.
On services, my company deals with both a lot of retail and services on, well, I'm a marine shop. So people will bring in their boat and say I could do a $10,000 repair job on their boat that for the point may take, say, 6 to 8 months. Now, and they will also be paying in stages, like they can bring in $2,000, $1,000, $3,000 to put towards the bill, so they don't have that huge $10,000 bill at the end. Because you know how people do. They gotta put a little bit and the whole thing.
You could VAT it in stages.
So you can VAT it in stages. And will it come up to the same amount in stages as it will as at the whole bill at the end?
7.5% of 1,000, 1,000, and 1,000 is the same as 7.5% of 3,000.
Why can't she VAT in stages the $1 million?
Just wait for the mic so we can get your question.
I was just curious why she couldn't VAT in stages the $1 million for the government.
Again, if she builds it in stages, every time she builds it in a stage, that stage is VATable. You see, the thing is this, that all that we do, all that we have to do, and I'm saying, this is what I'm saying, one of the positive fallouts from VAT is going to force us to look at the way in which we do business. That's all it's going to do. One of the positive fallouts.
I have a company that's a part of a group out in Nassau. It's also a bond license holder in Nassau. In Freeport, how do I register that company?
The one in Freeport will have to be registered by itself. You can't group it with the ones in Nassau. Well, all of them will have to be registered anyway, right? But if you decide on grouping, you cannot include the operations in Freeport with the operations in Nassau.
So you would pull it out with that same company structure?
You'll pull it out, yes, you'll have to pull it out. Just the company structure remains the same, but you'll have to do a separate return for your Freeport operations.
Mr. Warren. And thank you for an excellent
really an excellent explanation of the arithmetic and all the principles of how it works. I just wanted to say that you said there was still some question over consumables and exactly what would be considered consumables. And from the Port Authority perspective, we would say, I think you know today, that we think there are still questions over services. And I noticed you did include utilities as vatable. And again, I would say that today we would feel that between licensees, utilities should not be vatable. And I imagine you've got a different perspective, but that certainly would be ours as things stand today.
Yes. Okay. Suffice to say this, that if even they're vatable, they're fully allowable, which means they're fully deductible. It doesn't go to the bottom line of any operation. It doesn't. If it's not, if you don't have sufficient output tax against which to charge it, you're refunded the difference. So it doesn't. If you do a P&L, there's no way on that profit and loss or income statement or whatever we choose to call it. There's no way you're going to see a line item saying VAT expense. And once there's no line item saying VAT expense, it is not a tax to the operation. It's all recoverable. What I'm not sure about, and what I'm waiting to get clarity on, is whether if we have items that are now deemed consumables that are not allowable. In other words, that's the only time it becomes a tax, if it is not allowable. But once it's allowable and you can take it back, because you're holding the kitty, like I keep saying, you're holding the kitty. Once you can take it back, it's no cost.